Welcome to Aspin Academy, learn stock investment with experts.
Investment involves risk. This video is only for educational purpose. Please consult your financial advisor before investing. Hello friends. Welcome back to Aspin Academy, your trusted guide to smart investing and trading. Today, let's understand how stock trading can be simple with a real-life example, Reliance Industries. Let's say you are looking at the daily chart as a trader. You notice that Reliance has bounced multiple times from the 2,600 rupee support level. This is a sign that buyers are active there. At this level, a hammer pattern appears. That's your entry signal. So you decide to enter the trade at 2,610 rupees. Now, never trade without a stop loss. In this case, we'll place it at 2,550 rupees, which means you are risking 60 rupee per share. Next comes the target. Based on past resistance or technical analysis, you set your target at 2,730 rupees. That gives you a potential profit of 120 rupees. So your risk-reward ratio is 1 to, risking 60 rupee to possibly earn 120 rupees. That's a good trading setup. In trading, a strong risk-reward ratio is key. Even if you lose some trades, you stay profitable overall. Finally, when the price hits 2,730 rupees, you close the trade, book your profit, and feel confident because you followed a plan. So friends, remember, the stock market is not gambling. It's a game of discipline, planning, and patience. If you found this useful, don't forget to like, share, and subscribe. And always remember, learn in the stock market, don't gamble.
If you like the video, please like, share with your friends and family, and subscribe the channel.